Hi, good evening, everybody. Welcome to today's session on Nigeria's new tax laws. And in the house today, we have Barrister Ugochukwu Kelechi Esquire. He is a seasoned legal practitioner, an author, a tutor, and he's going to be leading our session today. So I know you have lots of questions about the new tax laws and how it affects you as a creator, as a small business owner, or as a freelancer, and just whatever it is you're doing as an individual, how it affects you as an individual, because this cuts across everybody as long as you don't have a company, right? So today it's going to break down a lot of things. Trust me, even myself, I've come to learn because there's so many nuances in this law thing. So don't catch ourselves in the net come January 2026. So I'll allow Barrister Ugochukwu Kelechi to introduce himself, and then we'll take it from there. Just highlight your questions and also share the link to everybody, your friends, or your status on your social media platform, because this affects literally everybody that earns money in Nigeria and even outside Nigeria. All right. You have the floor, sir.
Okay, thank you, Victoria. Good evening, everyone, and welcome to today's session. I'm excited and I'm happy to be interested in. Please just confirm that you can hear me before I proceed.
Yes, we can now. There's a break, but now we can hear you.
Okay, all right, thank you very much. As I was saying earlier on, this is something that captured my interest because I knew every number Nigerian have been hearing a lot about the recent tax reforms we had after that was moved into the year by the federal government, which got a lot of persons concerned and a lot of questions were being asked. So one of the right things to do is to rightly just by mere media post or social media post, but actually knowing what the law actually says, what the law actually provides for. And that's basically what we're going to be doing today. Um, and our target is basically for individuals and SMEs, small business owners, and which basically includes both salary earners, content creators, and remote workers, tech gurus, people that work from home, people that stay in Nigeria and work from to get paid abroad. So that's what we are going to be looking at. So I'm just going to give us an overview of what we're going to expect, and then we dive into what we have for today's session. So we're going to be looking at five major things. Number one is a basic foundation on the recent tax reform, why the tax reform, and what the foundation. Number two, we're going to be looking at an overview of what the tax acts really are. We're looking at, okay, what actually was this reform that was made recently, right? Then number three, we're looking at the applicable taxes that applies to individuals and small business owners. And then we're going to be looking at release, tax release and tax exemption actually that applies to individuals and small business owners that fall under this category. Then the last thing, we're going to be looking at how to stay compliant, how to stay compliant. Yeah. So I'm going to be diving and I'm going to be presenting, I'm going to be sharing my screen just to confirm. Can you see my screen already? Okay, please, can somebody just unmute and confirm that you can see my screen before I proceed, please?
Yes, I can see it.
All right, thank you very much. And I must say very big thank you to Valley Corp Global and her CEO, Victoria, for putting up this wonderful webinar session at no cost to people and small business owners and individuals to join in. And I must welcome everyone who is here on time. And you know the normal Nigerian um, issues that we have with keeping to time. I'm very glad that we picked up at exactly 5 p.m. So we'll just quickly delve into what we have for today. So the Nigeria's new tax legislation was actually signed in June 26, 2025. And this law is going to take full effect by January 1, 2026. The reason for this is after it was signed in June, the implementation had to be delayed or elongated so as to create room for sensitization of an awareness so people can actually be put on notice as to what to expect before this new tax laws actually take effect. So before now, Nigerian tax law was actually complex and loose, and it was loose in the sense that a lot of persons really don't pay taxes in Nigeria. A lot of persons. The little persons that pay taxes in Nigeria are basically government workers and companies, very big companies, and probably um, people that work in private establishments that are strict on taxes. But in recent times, this particular government that we have is a tax-driven economy. They believe so much in taxes. They implemented this when it was the governor of Lagos State, and it's about to do it nationally. And I actually got one of the best tax way to design one of the best tax policy. Yes, to drive enforcement in Nigeria. Actually, the truth of the matter is that the PR that is being out on the tax reform is just as if it's all bad. Actually not all bad. If you look at the true letters and essence of the reform, really. So, but we're going to be looking at it together today. So, we're going to be saying that the fears that are thrown out in the media, they are not totally real. It's just perception that people are still creating around it. So before now, Nigerian tax law was complex and not easily understood because of its complexity and different applicable taxes and tax administrative bodies. And the new tax law aims to be less complex, equitable, and easily implemented by everyone. It removes the incidence of double taxation and makes it easier for everyone. Actually, before now, we see situations where people actually add the tax. But the tax means that after you pay tax for one source, for instance, you pay tax to your state internal revenue collecting body, and you also pay to FIRS. So that's double taxation. You actually should be able to pay your tax to one receiving body. And that's one of the things that this particular law aims to do. So moving over to the next slide. The actually 4 new tax laws. It's not just one. And these 4 new tax laws formed into the general tax reform the act we're talking about. So the group of 4 new acts, it is the specific goal of improving tax administration, collection, and efficiency, all working together. Nigerian Tax Act. So I'm going to talk about the 4 acts that combine that actually form this particular tax reform that we're talking about here. So the Nigerian Tax Act. This explains what is tax, who should pay tax, and how much they must pay. Number 2, we're going to look at the Nigerian Tax Administration Act. This focuses on the tax process, filing, paying, and managing your taxes online. Because the good thing about this tax reform is that everything is done online. From filing to reporting to paying to managing your taxes, they are all done online. Then the next one I'm going to make clear is the Nigerian Revenue Service Act. So in fact, as we speak currently, there are 3 major bodies that are responsible for collecting taxes in Nigeria. Number 1 is the FIRS, Federal Inland Revenue Service. Number 1. Number 2 is Joint Tax Board, and then number 3 is still Internal Revenue Services. So each state have their own internal revenue. We also have FIRS for federal, and we have JTB, which is the national body for the national body for sorry please. Sorry please, a minute. I don't know, I left my slide mistakenly. The national body for the different state internal revenue bodies. So, but one of the things that this particular act seeks to do is to compartmentalize the different bodies into one. So, for instance, we have the Nigerian Revenue Service. So, by January, we are no longer going to have FIRS. We're going to actually have Nigerian Revenue Service as one. Then we're going to have the Joint Revenue Board. So instead of the different SIRS that we have, we're going to actually have a Joint Revenue Board. So these different state internal revenue service are going to report to the Joint Revenue Board, whereas the Nigerian Revenue Service, which will take the stead of FIRS, will be empowered to take care of federal taxes. So these are the four major areas of reforms. Number one is on the collection of the taxes. Number two is on the administration of taxes. Number three is on empowerment to collect taxes, the body that is empowered to collect taxes. And then number four is the joint tax board, which is Joint Revenue Board in this instance, JROB, that's going to be empowered to administer taxes, local taxes that are normally collected for states. So that's what this tax reform actually covered. So I'm not going to talk about under the new tax law, what are the obtainable taxes that we have in Nigeria currently. So generally, there are currently about 6 major taxes that apply to individuals, companies, small companies, and all. So sometimes the truth matter is that Nigeria operates both a direct taxing system and an indirect taxing system. What it means is that apart from taxes you pay personally by yourself, there are actually taxes also that you pay indirectly. Typical example is the VAT, which we're going to be talking about. So there are 6 major taxes that apply to individuals and SMEs, small companies. And number one is the personal income tax. Number one is the personal income tax. And I'm going to talk about the personal income tax. So for the personal income tax, what the personal income tax actually covers for individuals on employment and individuals in business and for investment income. So the personal income tax basically seeks to take care of individuals personally that earn salaries, individuals that have businesses, individuals that make investment personally. So that's what the personal income tax covers for. And we're going to also talk about company income tax. So company income tax are taxes paid by companies on profits. And for instance, in the current tax reform, it's been reduced from 30% to over 25% over 2 years. And the good thing is, this current tax reform reviewed the threshold for small companies. For instance, a small company that does not have an annual turnover of above 50 million is exempted from paying company income tax. So what that means is that if your company does not make an annual turnover of 50 million naira, you are not expected to pay tax. Now, there's something that I want us to have in mind in the course of this discussion. There's a great difference between filing for tax and paying for tax. And what the Act actually provides for is that you're exempted from paying tax, not that you're exempted for filing for tax. Because generally under the law, every company once incorporated should file for tax. And so even if you're exempted from paying, you are not exempted from filing, because it's actually the filing that will show the records that you are exempted from paying. So for instance, under Nigerian law, once you open a company, you are mandated to onboard with tax promas under the Nigerian law. So what tax promas does for you is that because of Nigeria operates a self-reporting system, you are meant to present your company's record at intervals monthly, showing that your records every month, this is what you have received from the different demands and services or goods that your company sells or offers to the public. And this is why you should be exempted from the tax, because you have not met the statutorily defined threshold. So that's basically for company income tax. And also have the value added tax. The value added tax is 7.5% on goods and services. with exemptions for essentials like food, education, healthcare, rent, public transport, and renewable energy. The good thing is that the new tax act actually expanded the scope for value-added tax. So it retains the 7.5%, but it expands the goods and services, all foods, actually. Food, before it was only some types of food, but now all foods manufactured in Nigeria are exempted from value-added tax. And that actually means that by 2026, if this should be implemented as it is, it should reduce the cost of food items in the market. They also have the withholding tax. Withholding tax actually applies to payments like dividends, interest, rent, and royalty. Basically, for withholding tax, it's just saying that when you receive certain kind of payments like dividends from your shares, interest, rent, and royalty, there's a percentage that will be paid to the government, 5 to 10%. But good enough for withholding tax under this particular tax reforms, it increased the threshold from 10 million to about 50 million. So if the returns on your shares is still below 50 million, if withholding tax is not going to apply to those particular investments. So for dividend, interest, and royalty. So I've talked about personal income tax, I've talked about company income tax, I've talked about value-added tax, I've talked about withholding tax. Then next, I'm going to talk about this capital gains tax. So capital gains tax has been the one that has been generating a lot of this stuff, especially for big companies. But for small companies, you really might not need to bother so much. But basically, capital gains tax are profits that is a percentage that is paid on profit from asset sales of a company or an individual. So, for instance, when you acquire a property, capital gains tax is basically subtracting the money you bought that property from the money you sold it from. So there's a percentage, and actually, before it was 10%, but they are seeking to increase it to 30%, depending on the kind of asset sold. However, there are exemptions which include sale of personal residential property. So, for instance, if you are selling your personal property, you are exempted from paying capital gains tax under the new tax law. Also, for compensations up to 50 million for personal injury or loss, you are not meant to pay any capital gain tax on such payments. And we also have the petroleum profit tax, which is for oil and gas companies. We also have the education tax, which is 2% of accessible profits for companies funding tertiary education. And we also have stamp duty. Stamp duty is normally paid for documents like checks, receipts, contracts, and for electronic transfer, which all of us are actually paying. Once you make a transfer correctly from one bank to another, you automatically pay 50 naira. So this amounts to the indirect tax I mentioned that you actually pay without necessarily reporting yourself, because it's automatic. And also have the development levy, which has replaced multiple taxes with a 4% levy on companies, and that will be reduced to 2% by 2030, which is one of the things the Act seeks to do. So the Act basically seeks to cut out a lot of small taxes. For instance, this education tax and NITVL tax, development levy, everything is reduced into the 4% on development levy. So basically, under this particular act, under this tax regime, we are looking at personal income tax, company income tax, we are looking at capital gains tax, we are looking at value-added tax, we are looking at withholding tax, and we are looking at capital gains tax. So, and then the development levy, which compartmentalizes different levies that are paid by companies normally into one. Then the next thing we're going to be talking about is some new highlights under the new tax law. So, for instance, number one, low income earners are exempted from tax. Now, what's the definition of low income earner? So this means people who earn between 1,000 naira and 800,000 naira. So once your annual pay, emphasis on annual pay, is below 800,000 naira, you are assumed to be a low income earner, right? So you are totally exempted from paying tax. You are exempted from paying tax. While higher income earners pay progressively higher rates. Now, under this particular new tax regime, higher income earners pay a percentage of between 20, 25. I think the max, yes, the maximum is currently 20 at 25%. So depending on the rate that
Excuse
you
me.
earn, we
Excuse
actually
me.
we're going to see that breakdown subsequently
Excuse me.
in further slide. I think somebody wants to say something.
Excuse
Is
me,
somebody trying to
please.
speak? Okay, go ahead, please.
Hello. I am Luara from Brazil, and you are from?
Please kindly mute yourself until he's done until he's done teaching.
Olá, olá.
Olá, boa noite, atores. Aqui no.
Hello, how are you?
Is somebody trying to
Hello,
speak?
hello.
Is someone trying to speak? Okay, I think we can go
Hello.
ahead.
Hugo
Hello,
Chugo.
So
guys.
What
How are
question?
you guys?
Hello,
Give me a
people.
second.
On your screen.
Hello, people.
is there
Go
any issue?
Chugo. What's your that's big G on the screen? What the fuck was that?
Okay, so let's go ahead. I think we're having a glitch with network from those joining or people that are not noting their devices. So let's just go ahead. So for low income earners, we talked about low income earners are totally exempted from taxes, from paying taxes. We also look at number two, it unified the different tax laws into one. The current tax regime unified the different tax laws into one. So it makes for a simpler tax regime. The NTA repealed and consolidates many former tax laws, including the Company Income Tax Act, Personal Income Tax Act, VAT, CGT. It makes everything come to one. So in one document, you can find the different applicable nuances that applies to these different taxes we have in Nigeria. And this reduces confusion and makes tax compliance easier. So the next we're going to talk about is corporate income tax. So for corporate income tax, the new tax laws increase the thresholds for small companies and businesses and define them as those with an annual turnover of 50 million and below. So before now, the annual turnover was actually 25 million. But now it has been increased to 50 million. So if the annual turnover is still between 50 million and below, they are recognized as a small company and were exempted from paying company income tax. Remember, not from filing for company income tax, but for paying company income tax. And also, a small company is also defined with your total fixed asset must not exceed 250 million. So that means that if your annual turnover is actually below 50 million, but your total fixed asset is above 250 million naira, you are not a small company. You are recognized as a big company, meaning that you won't take cover under this exemption. So furthermore, small companies are also exempted from paying development levy and withholding tax. That's also a good one for small companies. Then for value added tax remains at 7.5%. But the Act revises the scope. All taxable supplies of goods and services connected to Nigeria are chargeable. Non-resident suppliers must register and remit VAT. Input VAT recovery has been expanded. Oh, I think that we're having someone is
So sorry about that.
is on mute.
So sorry about that. I'm working on it.
Okay. All right. Thank you. Okay. So one of the things we're going to be looking at in the course of our discussion, we're going to be looking at the definition of tax, because one of the things that this particular tax regime defines is who is recognized as tax residents in Nigeria, and there's the 183-day rule. So it means that once you reside in Nigeria for at least 183 days, you are tax residents in Nigeria, meaning that you must and you should pay any applicable taxes in Nigeria. So we also have some items that are exempted from value-added tax, like baby products, agricultural equipment, educational performances, donor-funded humanitarian goods, real estate, financial securities, and all of that. So we all know how costly some of these items can be. So that's one of the reasons most of these items are exempted. We also have zero-rated items, which also include basic food and medical medical and pharmaceutical products, educational materials, electricity, medical services, tuition, exported goods and services, electric vehicles. So we are looking forward that this particular item, VAT won't be paid on this particular item, and that's likely going to reduce the cost of these particular items. So how it affects every individual. Please confirm that you can see my slide.
We can see it.
Thank you very much. So under the new act, individuals who are tax residents in Nigeria are liable to pay tax on their worldwide income. So let me explain what worldwide income here means. So what worldwide income here means is whether you stay in Nigeria and you earn from foreign companies, so far as you offer a service and that payment you receive is an income for a service you pay, that payment falls under a tax payable income. So it is regardless of whether the money is coming to you from Nigeria or it's coming to you from abroad. So far as that money is coming to you as an income, this does not mean that remittances from diaspora are going to be taxed under the new tax regime. No. In fact, one of the things that the tax reform body set up by the president has been doing is creating a lot of sensitization around that. So this tax regime is not saying that every money that comes into your account is going to be taxed. No, it's just basically saying that every money that comes in as income for service provided or goods sold is going to be taxed. And you're going to help yourself by when we go towards how to stay compliant and what to do. We're going to be looking at certain things to help build your records and how to build your documentation so that you can actually separate between your personal expenses, your business expenses, and certain expenses that are calculated as exemptions from being taxed. So for individual remote workers, any from abroad are included. So whether you're a remote worker or you're a salary earner or you're a content creator, the new tax regime seeks to capture everyone, meaning that you are going to be captured so far as you earn above 800,000 naira annually, you're going to pay your tax. Also, one of the how it also applies to individuals is digital and virtual assets and crypto trading, online income streams may be taxable. So before now, digital and virtual assets in Nigeria were not necessarily taxed. Taxes are not pegged on them. But now, they are now recognized as taxable items. And the new tax regime seeks to, in fact, very, very soon, that's why they are seeking for license for crypto trading platforms. Very soon, you're going to be paying a particular fixed percentage for every crypto transaction you make on a licensed crypto trading platform. That's one of the things that the government actually seeks to achieve. Because digital and virtual assets are now officially recognized. And that also means that you cannot and you should not be arrested for sin or victimized for being a crypto trader because it is now statutorily recognized. Virtual and digital assets are now statutorily recognized. So somebody cannot assume that somebody is into fraud because you're into crypto trading, so far as it is legitimate trading that you're into. So there's a breakdown here that you can see. So first, if you earn below 800,000 naira, 0%, you are not liable to pay any tax. And then next, if you earn above 800,000 naira and below 2.2 million naira, you are liable to pay a 15% tax of your annual income. Also, above 2.2 and below 9 million, 18% annually. Emphasis on annually. Also, above 9 million and below 13 million, 21%. So basically, just like it's applicable in most countries abroad, the higher you earn, the more tax you pay. That's basically what this tax is saying. So this tax is just trying to protect this tax regime is basically protecting low-income earners. I don't know if they want everybody to remain a low-income earner, but basically, as you earn higher, you're going to actually pay higher taxes, except you're able to build a good structure around your finances, which suggestions will be made toward the end of this session. So next is for 25 million. So once you earn above 13 million and between the 5 million is 3%, and then above 50 million, you are paying 25% tax annually, emphasis on annually. So this is the percentage on each of the thresholds that have been created under the new tax regime. So important deductions that will help by next year. So the act removes the consolidated relief allowance and replaces it with a rent relief set at 20% of annual rent paid, putting the maximum at 500,000 naira. So what this actually means is that this tax regime is taking into consideration your rent. That your rent is going to be calculated as a relief set, and it's going to be given a 20%. So what any amount you pay on your rent is going to be calculated as a relief set, meaning that 20% of your rent will not be taxable. And they are putting it here that if 500,000 naira, if 20% of your rent is more than 500,000 naira, then it will be taxable. Also, other reliefs also talks about life insurance premiums, mortgage interest, national housing funds, pension contributions, and other deductions that require documentary evidence. So basically, they actually deductions to your income that are actually not taxed, that doesn't fall under taxable income. So you just need to have documentary evidence, because as we are going to see, the good thing about this tax regime is that it's a self-reporting system. You're actually the one that it is your responsibility to declare what you earn, even though because it's going to be computerized now, and if you don't have the proper documentation, the government may still be able to see that you earn more than what you are declaring. But the truth of the matter still remains that with proper documentation, so far as you're able to justify the expense, it's going to go a long way in helping you. So the next is taxation of virtual assets. The new tax act establishes a comprehensive regime for taxation of virtual assets. Digital assets include crypto assets, utility tokens, security tokens, and NFTs. Also, profits or gains are taxable. So, for instance, if you do a good crypto transaction deal, your profits by next year is going to be taxed. Also, we have the market value principle. Market value used in computing tangible gains will also be implemented there, and also non-monetary consideration. Disposal value equals market value. Location. So location here is deemed they are located in Nigeria if the owner is resident or has a paying expense in Nigeria, a PE in Nigeria. So what this basically implies is, so far as you are physically located in Nigeria, one, or you have a PE in Nigeria, you are deemed to be tax resident in Nigeria. So, for instance, you may not be in Nigeria, but you have a small company in Nigeria. You are deemed that your company is deemed to be tax resident in Nigeria. We also have indirect transfers. So, taxable if disposable changes, if disposal changes ownership structure of the Nigerian company or assets. Then, before I even talk about this, how to prepare for the new tax law, I would love to talk about 50. I'm going to try to summarize it. So 50 tax exemptions and reliefs under the new tax regime that will take effect from 3rd January. Before we talk about how to prepare for the new tax law, because I listed up some things, both the ones that captured on the slide and they're not on the slide, what you could do to actually prepare for the new tax regime. So let's just talk about some of the exemptions and reliefs under the new tax law. So individuals earning the national minimum wage are totally exempted from personal income tax. Annual gross income up to 1.2 million, which translates to 800,000 naira taxable income, is also exempted from personal income tax. Also, there is reduced payee. Payee is paid as the earn for salary earners. For those earning an annual gross income up to 20 million, your payee has been reduced from what it used to be. And also, there's no personal income tax to be paid on gifts. If somebody gives you a gift, you're not meant to, or you're not liable to pay any personal income tax. Also, they also recognize deductions for individuals. Pension contributions to the pension fund account. There's no tax on pension contribution on national health insurance scheme. So any NHIS scheme you're buying, there's no tax on that. National health fund contribution, there's no tax on that. Interest on loan for owner-occupied residential housing. So if you are taking a loan on your property, there's no tax tied to that. Also, life insurance or annuity premiums, there's no tax tied to that. Rent relief, 20% of annual rent. I think I mentioned this previously. Going forward, pensions and gratuities still remain tax exempted. So you don't pay tax if you're a pensioner. If you're a pensioner, for most of us that have parents who are pensioners. And then we also have a very important relief created under this tax again, compensation for loss of employment up to 50 million. So if you have any injury or any loss that makes that you are losing an employment of up to 50 million, you are totally exempted from paying tax. So you are getting, for instance, people that have accidents, deaths, and very serious injuries, and you are paid, you are compensated for that. Such compensation for loss of employment, you are exempted from paying tax up to 50 million naira. However, once it's above 50 million, once such compensation is above 50 million, you are liable to pay tax. Now, for capital gains tax, sale of an owner-occupied house. So if you are selling your own house, owner-occupied house, you are exempted from paying tax. So this will mean by next year, a good advice would be if you have a property, you should be able to structure it in a way that it is owner occupied and not necessarily rent occupied. There are two different ways to do. So if the house merely gives you rent, it means that you are actually liable to pay because that rent that is being received on that property amounts to income, and you're actually liable to pay personal income tax on that particular rent, except you have a company you are using to manage that property. That will now mean it can fall under company income tax, which you can use to do that. Going forward, personal effects or chattels worth up to 5 million. So you are selling your personal property worth up to 5 million. You're also exempted from paying capital gains tax. Remember, I mentioned that capital gains tax is the cost of the difference between the cost of what you bought a property and what you are selling the property from. The difference, you are paying a percentage. Before now, it was a flat rate of 10%. Also, sale of up to 2 private vehicles per year, you are exempted. So we are selling just 2 vehicles per year. You are not paying capital gains tax on those 2 vehicles. We also have gains of shares below 150 million per year, or gains up to 10 million. You're also exempted from paying tax on those gains, dividends you receive on such shares. Also, gains on shares above the exemption threshold if the proceed is reinvested. So what this actually means is that even if your proceed is above 150 million naira and you reinvest it into the stock exchange market, it will not be taxed. Then also pension fund, charities, and religious institutions. So generally, religious institutions still remain non-tax institutions. However, when such religious institutions enter into commercial enterprise, they are liable to pay the applicable taxes that are applicable in each of those sectors they decide to venture into. So for companies' income tax, what are the exemptions we have here? Like we said earlier, small companies that have turnover not more than 100 million and total fixed assets not more than 250 million pay 0% tax. So this is a good expansion, actually. So it means that your company's turnover above, if so far as it's not above 100 million and your fixed asset is not more than 250 million naira, you pay 0% company income tax. That does not mean you will not pay. Now, eligible labeled startups are exempt. This is a very good place to say that if you run a tech company, it's very good that you get the startup label so far as your company is not more than 10 years old, because Startup labels are only given to companies below 10 years from incorporation. So you should do well to get the startup label, because once you get the startup label, even if your company exceeds 100 million, so far as it qualifies to get the startup label, you won't be liable to pay the company income tax. Also, compensation relief, 50% additional deduction for salary increases, wage awards, or transport subsidies for low income earners. Employment relief, 50% deduction for salaries of new employees hired and retained for at least 3 years. Tax holiday for the first 5 years for agricultural businesses. So if your company is into any agricultural business, crop production, livestock dairy, you have 5 years tax holiday, meaning that for 5 good years you are free from paying tax. Also, gains from investment in a label startup by venture capitalists, private equity, fund accelerator or incubator. This is if you understand what this particular OM is saying, this is a good time to be a strategic investor. So what this means is that if you are investing in a startup label company, the interest, the gains received on investment, no matter how good the amount is, will not be taxed. So far as that company is recognized as a startup and has the startup label. Also, the development levy. Small companies are exempt from the 4% development levy. Remember, I mentioned development levy as one of the recognized the new statutory levy that is being paid. So a small company is exempted from the 4% development levy. Generally, small companies are also exempted from withholding tax. Then for value-added tax, basic food items, 0% for basic food items. Rent, you don't pay value-added tax on your rent. Educational services and materials also, you are not paying any value-added tax here. Also for health and medical services, pharmaceutical products. So by next year, when you are going to get all of these services, if anybody tells you you are paying VAT on it, it's actually a lie. There's 0% VAT on each of these services. Also, small companies are exempt from charging VAT. So if your company is recognized as a small company, you are exempted from still charging VAT. It's a very, very good one for small companies, SMEs. Now, refund of VAT assets and overhead to produce vatable or 0% VAT goods and services, agricultural inputs, which includes fertilizers, seeds, seedlings, feed, and live animals. There's no VAT on them. And also purchase or lease of or hire of equipment for agriculture. Before now, when you're hiring a tractor for most of these companies, you are liable to pay value-added tax. So the new tax regime removes that burden of paying tax from such services. Also, disability aids, transportation, electric vehicles, humanitarian supplies, baby products, sanitary towels, pads or tampons, land and building. So generally, this is saying that these products I just listed are totally exempted from tax. Then lastly, electronic money transfers below 10,000. All of us already know this one. Once, and in fact, that's why most POS persons, if you're paying them above 10,000, you're doing something within 10,000, they'll prefer you pay 9,999. It's because of that 15 naira that should be paid. That once it's 10,000 naira and above, you pay 15 naira stamp duty. And then for salary payments, stamp duties are also exempted. Intra-bank transfers, like if you're transferring money from your bank, an account in your bank to another bank, you're not paying stamp duty. Also, transfer of government securities or shares, and all documents for transfer of stock and shares. So generally, these are the tax exemptions and tax reliefs that we have under the new tax regime. So quickly, how do we prepare for the new tax laws and the implementation by next year? I'm going to talk about these 5 things listed here and just few additional, so we can go to the Q&A session. So number 1, it is mandatory for every Nigerian, every individual that operates a business and earns income in Nigeria now to have a tax identification number. So you can actually have a TIN for yourself personally as an individual or for your company, a corporate TIN. Number 2, so actually by next year, one of the implementation seeks to enforce that if a taxable individual, if you don't have TIN, you may not be able to open an account. Not that you may not be able to operate an account. And one of the things that has been clarified is that nobody is going to automatically delete your account for not having TIN, or you're not automatically going to stop operating your bank account, but your banks are going to require that you submit your TIN, your tax identification number, and that's going to help track taxes. Actually, that's really the aim of having a TIN, just the way almost everybody has an NIN currently. So TIN is going to basically become as common as NIN very soon. So the next thing is organize pay slips, invoices, and bank statements. This is very, very important, especially if you're an individual that offers a service or you run a business enterprise. It would be good that you consider actually opening a company, a limited company. It is very important. And you offer your service as a company instead of as an individual. That will go a long way in limiting you from the threshold of that personal income tax. Remember that we mentioned that once your company is still having an annual turnover of 100 million, you are exempted from paying tax. And the good thing about it is that once you have your good documents showing your accurate expenses from your company, so far as the turnover is still below that 100 million naira threshold, you won't be liable to pay company income tax. And once you have a company that you are filing for your company income tax very, very well, you won't have an issue with personal income tax, except you're a salary earner. Also, update bank and contact info with your employer. This is very, very important. It's good that you work with your account manager very closely by Netscape to help you track your income and also make expenses digitally. Why this is important? Why is it good that you make expenses digitally? By Netscape, you can actually have invitations from just the way that it's applicable in some countries. You might actually get invitations to come and prove certain transactions. When you say that certain transactions are not income, and the government probably checks your record and see that that can fall under a taxable income. However, once you make such an expense digitally, not paying cash, you pay by transfer, you can prove that you paid for this service. You can prove that you used your company's account to acquire this property for your company. This is a good time to say it's actually good to start learning how to acquire properties for your company in your company's name. That will go a long way in separating your personal assets from your company assets. And in fact, even legally, it will make liability to be reduced from you in case of debt and other things. Also, use reliefs like pension, housing, and health insurance. Yes, so because why this is important is because pension, housing, health insurance, they are not taxable income, or they don't fall under taxable income. So generally speaking, how to position well, my three major suggestions for individuals and small business owners, content creators. Four major things I'm going to suggest to you is: number one, get a TIN, get your TIN. Number two, track your expenses with invoices. Once you're offering a service, try and track it with invoices, especially if you run a company. And number three, if you still run a business personally, it is good that you consider making it a limited liability company, which, because of the reliefs that fall under a small company, the relief that small companies enjoy. So it's good that you consider incorporating a limited company, and it actually comes with a lot of benefits, so that you can offer your services as a corporate entity and not as a personal individual, as an individual, basically. Then number four is to make your expenses digitally, just like I mentioned here in the course of the of this webinar session. So it's actually very good that you have records of your expenses, so that in case there is any questioning from any of the tax body, you can present your expenses with your records. Then lastly is, I would advise that you work with a tax lawyer or a tax accountant closely by next year, because it's going to go a long way in helping you track your expenses, prepare your records, your account statements, your bank statements. There are actually ways to go about all of this, really. And if you help you even reduce, even if your company's annual turnover is above 100 million, there are ways of being structured, and especially with your head expenses, to reduce the amount of tax that should be paid or that you pay basically. So I think at this juncture, I can say we have done the cutting for this particular session. So I think we can move over to the question and answer session, if any. Okay, Value Corp is raising up a hand. Please go ahead, ma. Value Corp, Miss Victoria, you can go ahead, please.
Okay, sorry, that was from before.
No.
So people were not seeing the slide, one of the slides. So, but that's already passed.
I was saying that I'm done. So this is question and answer session. Okay, Nora is raising up her hand. Nora, please, if you have a question, you could just raise your hand. I will point you out. Nora, please, you can unmute yourself and ask your question. Nora, Ibe, please.
Okay. Good evening, Barrister Casey. Good evening, everyone. Mine is not a question. I just wanted to, if there's a way you can go through the first 5 slides, like summary. Let's really know, because my first joined late due to network and all that. So I was still the one talking about the slide, at the message, whatever. Yes, I don't know if you can just an overview like of what you've done, the first 5 slides. I would really appreciate, sir.
Sorry, Nora, did you hear me?
I
Hi, Nora,
didn't,
did
sir.
you? Oh, sorry, I
I
discovered that
didn't.
I was muted. Oh, I discovered I was muted. No problem. I was saying that I will do that as a way of summarizing once we are done with the question and
Okay,
answer session.
okay,
So I don't
okay,
want
no
to take any
problem.
question. Yes, I will do that. And I will just summarize. Okay, so
Okay,
Ayomide,
thank
please
you.
ask the question. Please unmute yourself and ask your question.
Okay, thank you so much, sir. Thank you for a well-delivered lecture. Though I joined late, but I think I was able to catch up. So my question is, does the new tax act not talk about, let's say, investment that you have made in the business? For instance, let's say a dry cleaning company who has bought some very big machineries, the washing machines, the dryers, and whatnot. You have invested, let's say, some 20 million naira into that business. Does it not? Does the new tax act not talk about any relief for such investment that you have made in the business? Thank you.
Okay, thank you for that question. Certainly, if that investment is, it's going to depend on if it's being operated as a company or if it's being operated as you are operating it personally. So certainly, for company income tax, company CIT is normally paid on the profits received by the company at the end of the year, not on your expenses, your capital expenses on the business, actually. So because in actual sense, when by the time you are preparing your account statement, which is normally used to file CIT, if you are operating your business as a company, you will definitely separate your income, your expenses, and your profits. So that is definitely always normally separated. And what you pay tax on normally is on the profit gain at the end of the year. So definitely, if you have made expenses in your business as a capital head expense, it will be calculated. It will be separated from what should be taxed. But one important thing I would just want to say, or two major things, is that so one of the things that the company income tax does not fit to do, it's not saying that you should not file for tax. It's just saying that you will not pay if your annual turnover is not above 100 million, and if your fixed asset. So for instance, I mentioned investment has bought certain assets. So far as those fixed assets does not exceed 250 million, you are still exempted from paying company income tax. So once you're operating your business as a company, you are generally going to enjoy tax relief for if your business does not exceed the statutory threshold that has been set. And if it's even an agricultural company that into production and manufacturing, then you are not you have a tax holiday for 5 years actually. And also the applicable VAT on the different if you're offering certain services or you're selling certain goods. I mean, if you have three ways, just for confirmation.
Yes. I want to know if I understand you clearly, because you know now that you mentioned that 250 million in fixed assets, so that means that those investments will now be calculated under the fixed assets. So if that investment is not up to 250 million, it's not going to be taxed.
Exactly.
The company is going to be tax exempt.
Exactly.
So I think I do understand. I think I do understand. Thank you so much.
Exactly. You're welcome. Any other question before I summarize as Laura requested?
Okay, so sorry, I have another question, please.
Please go ahead.
The one, let's say for instance, someone is earning in a small company 150,000 naira. So I don't know if you can do like a scenario, or maybe if you have a provision for that scenario in this course, maybe I can just wait for that. What taxes the person will be paying, then maybe what deductions, the deductions in the salaries. For instance, maybe the company would have to pay it on the person's behalf, or the ones the person will have to pay in their own personal capacity. For instance, the personal income tax. So that's my question, sir.
Can you come again? Are you talking
Okay,
about a salary earner? Are you talking about a salary earner or somebody that is running a company or running a business?
I'm talking about this. I'm talking about the relationship dynamics between the company and the salary earner. So I'm trying to do a scenario where a company is paying a salary earner 150,000 naira. Sometimes the company may have to do some deductions in that 150,000 naira. So they will now remit the taxes on behalf of the employee. And also the employee still on their own personally will still pay some other taxes too, like the personal income tax. So I want to understand that the dynamics of that relationship. I don't know if you have, maybe you're still going to talk about it in this webinar, maybe later on. I don't know if you're going to do that.
I'm
if you're going
actually
to do
done
that,
with the
no
webinar.
problem.
I guess it's actually joining me.
Yes.
I was saying I'm actually done with the webinar. I guess it's joined me. So the truth is, for under personal income tax, once you pay as you earn as a salary earner, as an employee, you're not liable to still pay personal income tax again, because payee is a form of personal income tax. Once you pay as from your salary that is earned, you are not liable to still pay another personal income tax separately from anything that you do. So once your company already deducts the appropriate or applicable percentage of tax for the salary that you earn, you should not, or you are, that's one of the things that this particular tax act is trying to do. It seeks to eliminate double taxation, really. So it's either you are paying as a business owner, or you are paying as a salary earner, or you are paying as somebody that runs a company, or you are paying any of the taxes applicable, whether it's capital gains tax, or withholding tax, or value added tax, or development levy, or stamp duty, or whichever one apply. But basically, as an individual, once you are earning salary and you are actually paying the necessary deduction is being made from your salary as payee normally, it normally applies to a lot of companies and all of that. You are not liable to pay a second tax. So it seeks to eliminate double taxation. That's number one I wanted to point out. Then on the other end too, there's also a breakdown. I think I pointed it out in my slide when I started earlier. Let me see if I can get it. Yes, so here in the slide. So low income earners generally are exempted from tax. So once your annual income is not up to 800,000 naira, you are exempted from tax. So you use an instance of 150,000. So once the calculation generally is not up to 800,000, you are exempted from tax. And then once it's above 800,000, let me get that breakdown where I listed it exactly. Yes. So we have here, once it's below 800,000 naira, you are exempted from tax. Once it's above 2.2 M, 15% tax is paid annually on the income that you receive. One good thing we should actually note is that this money is calculated annually. So it's not necessarily that they're not saying that you pay 15% on every single money that comes into your account. Actually, the calculation is annually at the end of the year, which normally is divided monthly. How much did you receive as a taxable income? And then this is the amount that you should pay. And the truth of the matter is that because of this is digitized, the government is going to explore both the use of TIN, NIN, BVN to be able to track people's financial record and financial expenses. And I think that one of the things this also seeks to eliminate is fraud and money laundering. So I don't know if that answers your question.
Yes, it does. It does very well. It does very well. And the last thing is how do we file this how do we file? How do we do compliance, filing with the proper tax authorities? How do we even know who to file with, how to go about it? And I mean, these are the questions, these are the burning questions that I think every average person in Nigeria right now wants to know, because I don't think we have a lot of tax consultants. A lot of companies do not even know the next thing about tax, really. So, I mean, how do we go about this?
That's a very, very good question, and I must thank you for that question. A very important one. Okay, so generally, for company income tax, for VAT, and even CGT, capital gains tax, and quite stamp duties are generally deducted by the body that are responsible for it, banks and all of that, because they are recognized as institutions that can deduct such taxes. But for company income tax, for capital gains tax, for value added tax, all of them are normally filed with FIRS, which is going to become the NRS, Nigerian Revenue Service. So we are looking forward that by next year they might change the platform. But for now, the platform is still FIRS website, the tax promax website. So if you own a company, really, once you are actually running a company in Nigeria and your company has exceeded between 1 to 6 months, you are meant to onboard your company with Tax Promax. So once you onboard your company with Tax Promax, you have an account with FIRS. It is in that account that you file all the relevant taxes that are applicable to your company. Whereas for personal income tax, normally it is states that are responsible to collect personal income tax. So it depends on your employer if you're a salary earner, and then if you're not a salary earner, it is just a business that you run. Some states have local government collecting bodies that actually collect these taxes. But I think that one of the things that this tax reform is seeking to do is to build uniformity in collection. So we are looking forward that by next year, we might actually have other collection platforms for especially personal income tax. The one I know that we have a straightforward collecting platform is for CIT, capital gains tax, and the one related to companies. Everything is filed with Tax Promax on the FIRS website. So you will actually need the services and assistance of a tax lawyer or an accountant to help you with the filing, really, because except you are ready to learn it. If you are ready to learn it, actually you can learn it, or you can employ a staff of your company that can actually learn it for you and help you with this filing, and that will help your company stay compliant. But for personal income tax, because of individuals, generally, it is states that are responsible to collect such taxes. So most states have their own different ways of collecting personal income. Let me use keke driver, for instance. Keke drivers actually pay taxes and all those tickets that they normally pay and all of those stuff. Those are states collecting those taxes. So the problem we are having currently is that there is no uniform collection system for PIT apart from the one that's applicable to salary earners and then for pension funds too. So does that answer that question?
Yes, it does. It does. Thank you so much. Thank you so much. I think we can do a repeat of compliance training, where people will pay for it and they will, so that they can be trained on how to file these taxes. Thank you so much.
Oh, sure. Anyone that is interested after the class can definitely reach out to our host, Valicop Global. And if you need the services of a legal practitioner, we're always here to help you stay compliant. And I must thank you for that question. And you're a very sound legal practitioner, and your question is coming from a practical aspect, which is where the major concern is, which is on compliance. Because if you know all of this and you don't still know how to stay compliant, you'll still get hooked at the end of the day. Because most company owners, for instance, don't know that they are meant to onboard the tax format. By the time they actually get to know that they are meant to onboard the tax format, their company has already accrued certain penalties already under the tax format website. So any other question? Actually, the time for this webinar has been exceeded by 6 minutes. This is a 1 hour webinar. And Mrs. Victoria, are you still with us, ma? Hello, Mrs. Victoria.
I'm here.
Okay. Any question from your own end? Did you receive any question from people that subscribed from the meeting prior to now?
Not that I know of, but let me just quickly check.
Okay, so while you are checking, let me just do a last overview of what we did. So I started this webinar session by introducing the new tax legislation that was signed into by President Tinubu in June 2025, and implementation will start by January 1. I talked about the foundation of the previous or the current existing tax law that we have, which has been complex and has different applicable taxes and tax administrative bodies, and the fact that this new tax law seeks to build tax uniformity in our country and also create one uniform body that is responsible for collecting taxes. Also, we talked about the fact that this reform is not just one law, it's actually 4 different acts that are working together for administration, collection, and efficiency. So we have the Nigerian Tax Act, the Nigerian Tax Administration Act, the Nigerian Revenue Service Act, and the Joint Revenue Board, which is the Nigerian Revenue Service is going to replace FIRS by next year, and the Joint Revenue Board is going to replace Joint Tax Board by next year. Also, we also talked about some of the highlights of this new tax law. Before I talked about this, I actually talked about the different types of taxes we have applicable. I talked about personal income tax, which also includes pay as you earn. I also talked about company income tax. I talked about capital gains tax. I talked about withholding tax. I talked about value added tax. I talked about development levy. I talked about stamp duties. Also, we talked about the fact that this new tax law seeks to unify all the tax laws into one, and it repeals the different tax acts that we had prior to now: CIT, PIT, VAT, CBT, Stamp Duties Act, and it reduces confusion and makes tax compliance easier. So we also talked about corporate income tax, CIT, company income tax, which we talked about the threshold. So this 50 million here is a mistake. It's actually 100 million. So once your company annual turnover does not exceed 100 million, you are exempted from paying CIT. Also, such small companies are further exempted from even charging for VAT and even the development levy and withholding tax. We'll not all talk about the VAT. VAT remains at 7.5%, but the Act revises the scope. It increases the goods that are exempted from value-added tax. It includes basic food, medical and pharmaceutical products, educational materials, electricity, medical services, tuition, exported goods and services, electric vehicles, and a lot more that even agricultural products too. I will now mention how it affects every individual. We talked about the fact that remote workers earning from abroad, so far as you are earning money from any service you provide. So we are saying that unlike what people have been saying, that every money that comes into your account will be taxed, is not true. Is that what will be taxed is taxable income, income that you receive from a fee, that from a service you earn or a good that you sold. So that's just what that's what is going to be taxed. Unlike what people are saying that any money that comes into your account is going to be taxed. That's not true. It doesn't work that way, really. So it's still going to still remain what is generally applicable. So when you receive money for a service that you work for from any whether the person is in Nigeria or abroad, then that falls into a tax income, and that will mean that you are liable to pay. So we talked about the different breakdown here. So we saw the 800,000 0%, 2.2M 50%, 9M 18%, 13M 21%, 25M 28%, and then above 50M 25%. Also, we talked about the necessary deductions that will help. So rent relief set, which set 20% of the annual rent paid, and instead the maximum at 500,000. We also talked about the life insurance premium, mortgage interest, national housing fund, pension contributions, and we also mentioned there that such deductions will require documentary evidence. So it is a good time to say here that you should have most of your transactions well documented, and they will help you very well by next week. So we now talk about that, especially for crypto traders. Yeah, this applies to crypto traders, that virtual assets are now statutorily recognized. You should not be victimized for engaging in crypto trading. Gone are those days when your account should be locked because of you engaging in crypto transactions, as far as it's not fraudulent, and you have proof of the virtual asset that you sold, and you're using a licensed crypto trading platform under the Nigerian law. So we say there that profits and gains are actually taxable, and losses can also offset only similar gains. And we talked about the different ways that virtual assets are actually going to be taxed under the new tax regime. So lastly, we ended the section with talking about how to prepare for the new tax law. We mentioned that every individual should have your tax identification number, that way you have your NIN, and we mentioned that if you are running any business, it would be good that you consider incorporating a limited company, which basically separates you from your business and give your business a legal, makes your business a legal entity, and even lets you enjoy the extensions under the Company Income Tax Act. Sorry, under the Company Income Tax, really. And also, we advise you should consider organizing your pay slips, your invoices, and bank statements, which will serve as documentary evidence for your transaction, which will help for the preparation of the taxes by next week, different taxes that are payable. Also, we mentioned that you're able to track your income and expenses digitally, and instead you should update your bank and contact info with your employer. And also, it should be good, a good time to say you need to the services of a lawyer and an accountant to help you with your financial statement, your bank statement, by the time you need to file for these different taxes. You can never overemphasize the importance of these professionals in helping you cut and reduce some of the expenses you might incur on taxes. So I think at this juncture, without any further ado and with no further question, we can bring this session to a close. I'll be handing over to our host, Sally Cop Global, in the person of Mrs. Victoria Okoroji, to officially bring the session to a close. Thank you very much, everyone, for joining in. I remain your facilitator, Ugo Chukwu. Thank you and God bless you. I'm wishing you a great weekend ahead.
Wow, thank you so much. Thank you so much, sir, for your time, for sharing everything in details. So I know that some people complain of network fluctuations, and then a lot of information to process as well. So I'll be sending this link, the video recording, to everyone who signed up for this class. I think not everybody is even here. We had over 40 people signed up for this class, but everybody is here as well. So, and then also we go to the length of even transcribing this so that you can, go through it step by step in details as well. And then, just like you said, if you need, not if you need, most definitely, because sometimes some of these things used to be very, I feel like there's a lot of stuff to process, so I don't like even handling them myself. So Mr. Kelechi will be available to us if you need the assistance of a consultant to go through any of the steps, any of the confusing steps. And then if after this class as well, if you have any questions, yeah, I'm available. I'm available on WhatsApp. We are available on social media platforms, Valicop Global. That is VALUCOP Global on Instagram, X, YouTube, Facebook, and LinkedIn as well. And then our website, valicopglobal.com. So in the absence of no questions, I believe that we've received a lot of value. So in next 24 to 48 hours, just be expecting the recap, emails. So thank you so much, Mr. Kelechi. Thank you so much for your time. Thank you so much, everybody, for joining us this evening. So see you again when we call on you to come and get some value. All right, sir. Let's give us any final notes.
Yeah, no, just want to say my good pleasure. Thank you very much for putting up this wonderful session too.
All
And thank you
right.
for Value Company about.
All right, sir. Thank you so much. Okay, do enjoy the rest of your weekend and have a great evening ahead. Bye.